Good morning, everyone. Welcome back to Morning Markets on Friday, the 1st of May. It brings to, I suppose, the end what has been a very swift month of April. It seems to have flown past, and maybe that's because it's been such an eventful month for markets, with many events occurring during the month that we'll reflect back on over a number of years. To name but just a few, the significant volatility that we've seen in the oil market, with the oil pricing trading negatively at one point at minus $37 a barrel. The significant rally that we've seen in global equity markets, primarily led by the US, where we've seen some of the strongest moves in the S&P 500 in the past 30 years since 1987, and also just looking at the economic contraction and changes that we've seen over the course of the month as data has been released that gives us an impact of what's been happening with the COVID-19 lockdowns. And I think probably the most stark number is the 30 million people in America who have lost jobs as a result, and that's nearly 9-10% of the population through that period in 6 weeks effectively. So a lot of very significant events through the month of April. And then I suppose looking forward, the market is now starting to discount the lockdowns and the end to the lockdowns, or how we navigate our way through this over the coming number of months. Turning just to what we discussed as a team this morning, we focused on the performance yesterday primarily of the European and the UK market, where we did see both markets decline between 2 and 3.5%, 3.5% more for the FTSE, and I'll come on and discuss why the FTSE was weaker than Europe yesterday. In the case of Europe, we started to get sort of a swathe of economic data yesterday morning that just looked at the magnitude of the economic impact of COVID-19 across the Eurozone, and that just, I suppose, caused a reappraisal within the market of the dynamics that we've been seeing, and just the magnitude of the changes, particularly as it relates to consumption, for the very obvious reasons that the majority of people are at home, and it's already essential foodstuffs that effectively are being purchased in stores at this point in time. Obviously online there's a lot of other activity ongoing. And then turning to the UK, the main impact in the UK market yesterday in the FTSE 100 was the announcement from Shell, which again is another historic moment. For the first time in 70 years, Royal Dutch Shell cutting their dividend, and I think more significantly is the resetting of that dividend at a significantly lower level. So the quarterly dividend was reduced some 66% yesterday, resetting at that level going forward. So indicating the magnitude of the change in the oil market, but also how maybe Shell are perceiving the opportunities in the medium to longer term as well. The reason that the market did react as negatively it did to that, and particularly in Shell's case, was just the yield and the income that Shell had been providing to investors and to the market over that long period of time. So that reset is quite a material event. And turning in to just one other thing that I wanted to touch on, it was the ECB press conference yesterday. I think the key takeaway from that is that the ECB are trying to do as much as they can, but they're kind of working with one hand tied behind their back. Why do I say that? They need to see some further support from a fiscal perspective, and indeed Christine Lagarde in the comments was very much pointing to this and really suggesting that the fiscal response needs to step up. But as we know, that has been challenged and is challenging for the Eurozone political leaders at this point in time. So that really does contrast with what we've been seeing from the Fed and from the Bank of England in terms of the coordinated response that's being applied to the market at this point in time, or to the economies, I should say, at this point in time. I just draw your attention to our weekly blog post today, which we'll just be discussing in more detail just the events that we've seen from central banks over the period. And indeed, markets today will be relatively quiet, with a large proportion of Asian and European markets closed. Please join me again next week, and I hope you have a good weekend. Many thanks.